This conference will now be recorded.
Good morning, all. This is Fatty Hemsey. It's 8:33 a.m. Excuse me, Monday, May 17, 2021. We start our morning brief now. Just a little word of inspiration for you guys. This was posted. The first one was posted for me. This for the daughter of my dad's very last commander at WAF. They caught him and my dad at the command post, and he was within 30 days he was executed. But he was one of our Akrojet, one of the best pilots the Middle East ever had, and he used to fly with or exercise with sometimes with Thunderbirds and Blue Angels that would come in. And so. The other one just brought into my attention the other day. I thought it was worth putting in there for you guys. My success in investing, of course, I take the trading, should take out. It's rather simple. Yeah, it's not trading because there was no trading back then per se. I buy late and I sell early. Think about that. So don't jump into a frying pan yet, and leave something on the table for the other guy. Remember Scarface? Yeah. With that said, let's get our program started. Housekeeping. A couple of you guys are coming here. We welcome them. I was not trying to imply that earlier today that I got to look good in front of them. Doesn't matter if it's customers. No. Inherently, because of the softwares we use, the technology we use, they need a little bit more attention day one, just to get them started, just like you did. Just like anybody else who came here, day or two, we're gonna walk them through. That's all. We can get them through that initial hump. Then, just like you, boom, smooth sailing. Okay. Please, if you're joining us for the first time, you realize that this is a chat room, so you need to have first name and last name. If you come in with your first name, we cannot accommodate you. Okay, thank you. Anuja, that I'm talking about you. Please, for next time, please come in full first and last name. No aliases, please. Mike Baker, how are you, sir? Hi, Susie, and of course, I too. Okay, thank you, guys. This is unfortunately our mode until we get to V3. V3 is not here yet, no. But the issue is the tail end, the SSL, or what they call it now. TLS. All right. So let's move on to Econ Canada. Hope you had a good week overall. I want to warn everybody, this week will be different than next week, in my opinion. Last week we were extremely lucky. We hit all cylinders running, and because of this V. This week we caught the V, so that was a huge run up. That can be repeated that easily. Okay, we almost made 100. We made on each of these days between 18 to 20%. This is scary. Yeah. I mean, as I trade some of them on this machine, some on the other bigger machine, the bigger accounts are on the other machine. Some of the, because that's a better throughput. The returns were scary, and in terms of I call it luckiness, and I had to actually spend the weekend explain a couple of things that may not. That's the wrong expectation. We may not be able to repeat that in a bit. It's just the way things are. So that applies to you too. Just be careful. This week is very different than last. All right, now this morning, New York should be out now, right? 8:30. Let's see what they did. That's New York State. Okay, 24. They came in line almost, but before lower than prior. Okay, and they were expecting to be slightly lower, but we were lower than that. So not good. Range was 20 to 30. All right. Yeah, that's it. That's New York. Okay. Housing market. That's coming up at 10. That's going to be a big one. But no, the housing market being next. Okay, so they're giving a green color. They're thinking it's going to be constant. Okay, we shall see. I have no idea what this means. I don't know even who puts it together. Home builders. Okay. NHB. Gotcha. All right. Boston is speaking. I'm not worried about him. Okay. Yeah, Boston, no wonder that's what's good. Boston runs Atlanta, yeah, and then Florida is a vice chair, yeah. He may be impactful like that Boston again, Treasury International Capital, and then Capital I will pay attention to 6 p.m. So the market when market reopens, that's what you want to watch. Could be market movie. That's the guy from Dallas. He runs Dallas. It is all FIB, Federal Reserve Board. Okay, good. All right. Moving forward, housing starts on permits. Yeah, that's going to be important. You know that. That's I don't need to emphasize that for you. So they're expecting even a downturn in TAN. Okay. Okay. A little higher on the permits. Slow on the permits. Gotcha. Okay. Capital speaks. Boston speaks. Bullard, Mr. Dove speaks on Wednesday. Now we gotta watch this. So this is 2 p.m. Wednesday is gonna be crucial. 5 minutes now. You might put that on your phone. Jobless claims always very important. Philly Fed, yes. We're gonna look at that. See what that says. Remember, this is the expiration week, right? Yeah, this is a good schedule here. Yeah, that's the third Friday. It's the expiration week. 50-45. Really. Oh wow. No, it's okay. Coming back. Okay. And then leading indicators, my favorite. I'll look at it. It's a should be really a green product, but not black. You get red and you get a green and then black. So Kaplan speaks again. Jesus Christ. Kaplan is what is he doing it for a cup of tea? He's just constantly speaking. Existing home sales, guys, Friday, and then of course you have to have PMI composite. So expiration. I think they're getting us set up for the end of the week. Okay. You gotta look at what these guys are telling us where to go. Yeah, good. Okay. All right, charts. Let's go to charts quickly. All right, timer charts. Huge run up there on the down to up volume. So that's going to be our peg. That's going to be our benchmark. Okay. We have to take a look to see when the next move down is. If it's a little bit lower, with this number also lower. So the lower price of this value, but better up to down ratio or worse or higher down to up ratio. Remember I said first up to down, better. That means it more healthier for the market, which means that translates to a lower down to up volume because it's in inverse. So if we get it like let's say there's a spike here, we get like a 4 or 3, 2, that would be ideal. But I don't like them when they're too close to each other. We gotta give it. This is not it, in my opinion. We maybe meander here, roll down, but I want to see it a week, 2, 3 weeks. Once in my lifetime, I've seen within a 1 week spread, and also was effective. You want 2 weeks, 3 weeks, so that there's a side reaction. Market doesn't know what to do. Then it drops down. Then it goes to a capitulation. Then it takes off. That one you want to buy. You want to buy the W. Okay. So think of it as the first leg. You want to buy the W. You want to buy it here somewhere. We'll see. Of course, we can't show it. That's future. But that's what we want to anticipate. This is pulling up. CIDF is positive. And both McKellen and Brett Thrust jump. As expected, as we discussed in real time. Canaries, okay. Dow came back up, huh? What happened? Well, I hate this when your mouse goes over something jumps in. This is stupid. Hey, I want to be in control, not Microsoft. Okay, bounced off the 50 bar, beautiful. Transportation came back up. Russell started breathing, getting some life in it, and that was a key support area. Okay, look at that. Look how many times is that. I mean, this was getting scary on last Wednesday because that's where will be the next support. You're already below 50. Mathematically, that's where it wants to go. Remember, market has got some math in there. Hi, Jake. How are you? Good morning. Hi, Michael. Hi, Mike. Good morning. There's got some math in there. There's some physics in there. And then, the rest is a little bit crazy. So order. Guys, I did put a little piece there of to read. I'll post it there quickly for you guys. Oh, no, it's not it. Oh, no, wrong one. There we go. Take a look at it, read it quickly, and it's also on the tape. If you want to take a look when you come back and watch the video. Okay, just inspiration in the morning. All right. Buy, no, buy, sell. The sell was nice, very nice. Now we're hitting at the center line there. I don't know what the bottom bar of that is. I have no idea. But that's part of this cant system. Which you haven't, I think we went in with this to time of digest. I think that may be before it. I don't know. 2003. Get verified that we have a system and we could withstand it operationally with them. I think that's why I kept it. This may be slightly modified because it's a weekly data, but we're good. Of course, weekly, I know. Problem with traces, you cannot do a weekly on a middle of the week. You can't say, oh, on Wednesday to Wednesday. It's always Friday to Friday. Cannot pick up. It is what it is. What it is, the purpose is to give you a separate mechanical confirmation and alert whether you're on the right track or on the wrong track. Okay. Make sure I don't have anything here. No. Okay, as I said, a couple of folks coming in that are crucial. I want to make sure you get them through the first hump. Okay, we have this up there, Skype. I'll have Nancy look for that. Anyhow, this was key number. We talked about it, remember? We had 220, I believe, on Tuesday. Oh, Monday, on Monday. Sorry, Monday, yeah, you have it. Well, we closed down because of intraday reversal. But we had a new high on Friday. Jake called it. He says, I'm going to say, he actually called me before it. But here, he says, the Friday number is good. And the market, well, not good to say, but if the market rallies based on the Friday number, I'm buying puts to the gazoo. And that was a great call. So, remember, he's the inventor of that JT indicator. So, don't forget. Back tested like 4,000 years. Very good. Yeah. So we got a 220 that day. To me, it reminds me of prior years where we sold in May and we went away. One good one was May 16th, 2008. Now, I'm not trying to say this is 2008. And we have other problems, but definitely not 2008. But that was a March 16th. And I remember a webinar. I had a seminar in Las Vegas over the weekend, and that was it. And I kept pounding the tables, guys. Be careful, be careful, be careful. Yeah, some of those guys by August, they're no longer trading. They bought the dips. Yeah. Scary. You cannot just buy the dips. If you could do that, everybody on Robinhood would be a billionaire. All right. Volatility, obviously we dropped back. We were at 4 sigma. I kept on mentioning that to you guys. Watch out. Look what happened on a reversal day on Thursday. It actually went there first and then pulled back. Well, could have been overnight. Remember, this baby trades at night. I'm saying early in the morning. So that's what you see. Here, so this is live. This is today. That's where we are right now. We've pulled back. We're down 70 handles on ES very quickly. Sorry, I'm trying to get my head straight on this. No. Okay, where am I? We're at 16 down. Okay, we're worse. We're at negative 21. And then I get it. All right, so SQ tick down because we got a little bit better. We took some pressure off. That's all. No more than that. Don't read more than that into it. Remember, this is an event issue, the event indicator. It's not a day-to-day thing. When it hits a 3 sigma, 4 sigma, or negative 3 sigma, negative 4, you might watch. Rest of the time, could be meandering. Also, look at the shape of the center line. Okay, and went there. 1 second. Well, yes. Hold on 1 second. Let me just let you know. Yeah, all right, so, no read here for me, 139, very neutral. Also, the shape, this slope of a center line as the mean reversion is key in trading indexes. So, as law of averages. So it's rising, I was reading that quite differently, or dropping, but when we're very flat. And you guys see the signal levels also collapse. So that's probably gonna be in that situation until we uptick. When we uptick again, you could possibly see it, another run up. But I think we got two that we can play with for now as a signal. The TD, 55.25, huge bounce. That was another confirmation. We were getting to a rendezvous point also down here. Two of them of the stock RSI were already low. So that was another setting we had. And also we had a high reading here, near zero. All other things being equal, ceteris paribus, yeah, we had to bounce from here. And we did, like clockwork, boom, boom. Okay. Let me go to one more chart. I'm trying to wrap this up quickly for you. There we go. Here, there we go. That's your other chart. There we go. Now, why is this so big? Hold on. Okay, we got maybe. Okay. How do they know what you bought the other day? Yeah, exactly. Welcome to World of GM. Google. Yeah. All right. So, after finally many divergences, this thing paid off. Okay. And yes, after many divergences, this thing paid off and pulled down here. Rallied up. This was not a divergence zone. And so far it's insane. See that? So to me, no signal per se. But we're high up there. We're at 91.75. Let's say 92. Okay. And normally we don't last up there very long. It drips down. I mean, this was exceptionally high. It was 97. And you could see actually it dropped and we went up. And this was a no, you're coming down. That took everything down. So if you guys read the nuance a little bit, but you could see where this level was, look where this, how low this one was. Yeah, we're about down here when the peak came in the S&Ps. And guess what? This guy. Keep track of it. It's end of the day. It takes an hour to be available. Okay. On stockcharts.com. I've looked at since 2009. Not more than that. 2009 in Chicago. Somebody recommended that. The key thing for me over these years has been this, the differential between the moving averages. Is it 20 and 50? The default is 10 and 20. That's too close. Use 20 and 50, a little bit slower, and because this is a very qualitative indicator. And you could see off the bounce coming, and you can see what happens up there. They separate them, and then if the separation stays, the acceleration continues in that direction. That's all. Don't make a big case out of this. It's not anything that fancy. All right. Overnight. Again, we did 17 and 71 right now. That's where we are. Archives are posted for all you guys over the weekend's caught up. If not, let me know. And today we'll try to get you, not this one. We'll try to get you this. We're not going to distribute this. We can't. But this we might put out on that machine that you guys look at. This stuff, the colors. And remember, the cyans you buy, the magenta you sell. Okay. No, not just jump in when it comes. No, there's a nuance to it. That's what we do. That's what we have ongoing chat there, so we can explain. Okay. But I think it's ready for you guys. I think we'll see. We still have not solved the security issue we have because I haven't had time. I'm just really exhausted over the weekend. Took Saturday off. Well, we may do it in two stages. Give you some updated code and solve the indicator. I mean, the security issue in a day or two, or maybe a week or so. This is something it may involve us changing some parameters to scramble some of our passwords even further, and so that's what I'm trying to look at. It's it's not difficult, but it's just labor intensive. Yeah, it's not actually, we're not inventing anything, but we gotta watch a lot of detail. So we'll get there. I didn't expect it to be like last week. So we're grateful, but also it doesn't start actually, right? It starts dangerously. Just a quick comment. One of my investors in the fund said that he said that he said that let's try to see how far we can push this safely. I said safely. What does that mean? There is no. I said this is I'm sorry. I said there's no safety in. Why am I getting the right screen here? I don't know. I said there's no safety in this trading. Who is yeah, oh there we go. Who is, why are you brainwashing yourself? Setting yourself for a disaster. It's managing expectation that matters, okay, in this business. Why do you think you can trade, anybody can trade index futures safely? There's no such thing. Either you can afford it or you can't. And what's the test for affording? No more than 5% of your liquid capital. That's it. So it doesn't change your lifestyle. Total risk capital cannot be more than 5% of your net worth. I mean, liquid net worth. I mean, and if you get, man, let's say get to a couple 100,000, that's a lot of money. That's a lot of money in index futures. Remember that, that's a lot of money. All right, with that said, let's wrap this up. We'll see you on the other side. I'll send you an invite for the chat. Thank you.